Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Our first live broadcast. This is where you make the show and you bring the banter. Yes, guys, a global crypto station that encourages you, the crypto enthusiast, to call in, to break the news, to give us your views, and to talk to our experts, to banter. We want to bring the banter of Twitter and Telegram right here to an audio-visual medium that is eventually going to stream 24/7, 365. It's going to be amazing. If you want to call in, go to our website, www.cryptobanter.com. You can call in either by clicking the button on the website, or you can call in via WhatsApp or at CryptoBanter on Telegram. Tonight, we're talking a lot about the rise in the Bitcoin price. And I've got a whole lot of experts with me. I've got Luke Martin, or you may know him as Venture Coinist. I've got Tone Vase with us. I've got Matti Greenspan with us. And we're all going to talk about the rise in the Bitcoin price and where we're going next. Tone, I'm going to hand it over to you because I know that you've been talking a lot about this rise in the Bitcoin price. Where are we? Where are we going?
Right. So I have been very, very bullish. I became a bull pretty much the day I won that bet with you. So you owe me a steak, Ran. I haven't forgot about that. Good luck on that one. Thanks, Maddie.
Tone, there's social distancing, man. I can't repay the steak just yet.
And so at that crash, when we crashed back in March, around March 12th, I pretty much became a bull right then and there. And I've been a bull the entire time up until very recently. Obviously, as a trader, there's been times where I said, hey, we're a little overextended. We're probably toppy, probably going to have a pullback. And I've been fairly right all throughout this bull run since March. And it's kind of crazy how you're catching me for your first podcast right now, because I'm known for being a giant bear for the last 2 years. And it so happens you're catching me right now. And yesterday I started exiting my bullish positions.
Yesterday you started exiting. So Tone Vase, the bear, is coming back.
For a very short time. I just think we've gone up a little too far too fast. And like all of my metrics are coming into a top right now as of yesterday, today, and over the next 2 to 3 weeks into early December. My daily, my weekly, my monthly charts, they're all pointing to a potential top. That doesn't mean there's going to be a top, but right now I'm looking to exit all my bullish Bitcoin exposure and wait for that pullback. And we can talk more about that pullback after, I'll let others have their say.
But Tone, before I let you go and before I call the others in, you saw the gold price coming back this morning. Gold went from like 1890 back to like 1850 with no real reason other than people citing the vaccine as why it's happening. Do you think that's correlated?
No, I don't. I think gold has some correlation to what's going on with the U.S. presidential election and the economy and whether people feel gold is just a safer asset than holding their dollars. I also think gold went a little too high too fast. Gold and Bitcoin have been very similar. They topped at different times. Gold topped back in August, and gold is down 10% since August, but it's been 4 months. So it's just been a slow grind down. I'm actually a bearish gold a little bit still. I'm thinking maybe another 100 to 150 point drop in gold. And I think gold will be fine. I think gold will get back, break 2,000 and go all the way to 3 sometime starting next year. But they're acting a little bit similarly. Gold got a little too high too fast. And I think Bitcoin is a little too high, too fast at the moment as well, starting this week.
So, Venture Coinist, Luke, I'm going to bring you into this conversation. Are you calling the same thing as Tone? Are you saying we've seen this run up and it has been a very strong run up full of steam? And now are we going to have this pullback? And if we are going to have a pullback, where's the pullback going?
Sure. I mean, maybe we are topped out. I don't know. One thing I learned in 2017 and 2019, even we went higher than I think people thought we would that year, is trying to call tops is statistically going to be a losing game. It's going to happen less than 1% of the time. And, directionally, I think everyone knows where we're going. We're going up. We're in an environment right now. We're going up a few percent every week, sometimes every day. And we're also going to see 10 and 20% pullbacks. That's normal to see in this kind of bull run. So I'd prefer to stay spot long until something in the market structure changes. That would be a blow off top. That would be, after the blow off top, forming a lower high. Right now, we're just not seeing that. So too early to call for me.
Matti, I know you've been looking at the graphs and charts. You sent me a whole presentation with graphs and charts. We are going to get into that. But before we get into that, before we get into this amazing presentation that you've presented for us, what I want to know is, are we at the top, and should we expect a pullback? In fact, if you were trading, would you be lightening your position now?
No, I'm actually just strengthening my position at the moment. Certainly, nobody knows what's going to happen. As Tone very correctly pointed out, that according to the charts, we are due a pullback. But I don't think that the charts are what's driving the markets right now. I don't think they really matter. What's driving the market is the limited supply of Bitcoin, the idea of digital scarcity, which is now suddenly become an anthem for Wall Street. We've got Square and MicroStrategy adding Bitcoin to their balance sheets. We've got Visa, MasterCard, and PayPal all adding on-ramps to Bitcoin. We've got Fidelity, Paul Tudor Jones, Bill Miller, Stan Druckenmiller, Anthony Scaramucci, and a newly elected Congresswoman, Cynthia Lummis, who is advocating for Bitcoin on national television. The fundamentals are very strong here.
So I agree with you. The fundamentals are very strong. But I also say that we've had a great run. We've run from 8,000 or 9,000 in less than 60 days, if you want to call it. And now we're at 17,000. And we kind of know that any one of you will tell me that when we get this momentum, at some stage, the pendulum's going to come back.
Yep, good.
Luke,
well, you gotta watch out for those.
Okay, let's talk about the fundamentals. So there's been a shift specifically from my Wall Street friends who have now started to take a real interest in Bitcoin. Tone, are you seeing that? I know you're an ex-Wall Street guy, you're an ex-trader. Are you seeing the Wall Street guys starting to ask you more questions?
Well, they're not asking me more questions, but they're certainly asking more questions in general. And I completely agree with you, Maddie, that fundamentals are incredible right now. And there's lots of fundamental reasons not to even consider selling any Bitcoin. But this is where a show like this, which focuses on trading, is different than shows that focus on investing and long-term fundamental analysis. From the fundamental analysis side, no, even if like a friend says, hey, Tone, I want to pick up, any chance you can sell me a few $100 worth of Bitcoin? My answer is always like, no, I'm holding on to every Satoshi. So there's definitely a difference in what to do with your Bitcoin for the next 2 to 3 years. And in that case, my answer is always the same. You should have bought your Bitcoin yesterday. And if you wait and you ask me again tomorrow, my answer is going to be you should have bought it yesterday. But we are talking about trading, and fundamentals are great. Companies putting in their excess cash. We finally have a senator that understands the difference between, Bitcoin and Ethereum, which is incredible. I never thought that would happen. And so things like that are incredibly bullish. Obviously, Citi coming out with their reports, JP Morgan coming out with their reports. All of this is bullish, and we all knew this was coming eventually. And it's important from a regulatory perspective, because the more of these financial institutions get involved, obviously, the more they might not be directly buying Bitcoin. It's very difficult for JP Morgan as an institution to buy Bitcoin. They're a commercial bank and advisor. They're not really a hedge fund.
They can use like Banter or CME, I guess, no?
Well, no, but that's not their business. Contrary to what people believe, JP Morgan and Citibank, they have a couple of subdivisions that speculate, but the core of their business is not speculation. The core of their business is providing bank services. But if they are more open to Bitcoin, then their customers are more likely to buy Bitcoin. And then their lawyers and their lobbyists are more likely to, keep Bitcoin away from this it's only used for bad things and we need to ban Bitcoin. So there's a lot of additional good things that are coming with these institutions getting on board.
Now, Tone, I think I heard you say Bitcoin and Ethereum in the same sentence, and that's not the tone base that I know. Are you a little bit more bullish on Ethereum, or is that or not?
I mean, I'm bullish only on. See, it's hard to say that I'm bullish on all of these altcoins. I'm bullish from the perspective that people will continue to make stupid choices, and as Bitcoin rises, a lot of the stuff that is cheap due to unit bias has the possibility of rising. Am I bullish on any of these altcoins from a fundamental perspective, the way I'm bullish with Bitcoin? No, of course not. I can look at a chart and I could look at some of the FOMO metrics and I can say, yeah, you know what, this coin is likely to pump, but I'm not touching it because I don't believe in the fundamentals of that coin. And it can go to zero at any time. And you have to be on the insider chat groups in order to really time it right. And I don't do that. So I still stay away from it, even if I do, in the back of my mind, think there is a chance for gains.
Okay, Luke, I know you've always been an ETH bull. The last time that Bitcoin was at 17 or 18,000, ETH was at about $900, somewhere around there.
Sure.
What's a better buy right now, Bitcoin or ETH?
Gosh, I mean, Bitcoin clearly for the past few weeks and especially for the past month, I have been holding ETH in November, but something that kind of made me rethink, even if you're bullish on ETH, the upside capture isn't there. If you look at other DeFi coins, they're just moving better. There's a lot of different scenarios that can happen with ETH and Bitcoin, or more specifically, ETH and other DeFi coins. There are scenarios where DeFi coins could do well and ETH isn't necessarily doing so well. It's happening right now. There's probably a scenario where DeFi coins do poorly and ETH probably does poorly with them. I don't think there's a lot of scenarios where DeFi coins do poorly and ETH randomly does well, right? We're just not seeing that. We're seeing Bitcoin do well and on spurts. We're seeing coins like YFI and Lend and Rune and some really hot DeFi coins doing well. So I've kind of had to rethink that for the past month. I don't think it's the old, money that sloshes into Bitcoin, that sloshes back to alts. I think they're kind of two separate groups right now, with perp swaps being so prominent, USDT markets being more prominent. So I think there's going to be idiosyncratic. There's going to be small DeFi plays you can play on a weekly basis or on a daily basis. And then other than that, focused on Bitcoin. ETH is lagging, and I'd have to see something pretty major to think that changes.
Again, just a reminder that this is a call-in station, and if you want to chat to our guests, you can call in. You can either call in on Telegram at Crypto Banter, or you can call on WhatsApp at +1 646 732 4269. That's +1 646 732 4269. If you don't want to call in on WhatsApp or Telegram, you can go to our website, which is www.cryptobanter.com, and you can press the button or the widget, and you can call in anonymously. We won't know who you are, where you come from, because we know how important anonymity is for the crypto community. Mati, Bitcoin or Ethereum today? $10,000 to invest. Where do you put your money?
I actually like Luke's answer a lot. For me personally, I'm 100% in Bitcoin on my public portfolio. You can see it on eToro. But what was interesting to me about this rally, and usually we have either a Bitcoin rally or an alt season, and this time it seems that there's kind of more than one thing happening at a time, and we have several different dynamics at play. And what we've often seen in the last few days is Bitcoin shooting up and then one alt going with it. Okay, so it's Litecoin or it's Dash or whatever.
Have you not been watching the DeFi coins, YFI and YFI? I mean, those guys have had YFI's up 200% in the last 2 weeks. Man.
That's for cowboys like Luke. I'm an old fogey. I don't get it. It's too volatile for me.
So you're a Bitcoin man through and through.
I put YFI on my watch list, honestly, but I'll take a look at the charts and go, wow, every once in a while. I mean, just the other day I saw it up 1% while the rest of the the rest of the altcoins were down, and I go to myself, and that's a lot of freaking risk for 1%. And and sometimes when it's zooming, if you're fast enough, if you can get in with on a broker with low fees or whatever, and there's liquidity there, go for it. It's for me. I mean, I'm always trying to look at the long-term perspective and have my portfolio positioned as such.
So I have a different theory. And my theory goes something like this. The most valuable companies in the world today are Amazon, Facebook, Google, you keep them going, Uber, etc., etc.
Microsoft, yeah.
And the only reason that they get such high valuations is because they have the network effect. So if you think about Google, the reason why so many people use Google is because the more people use it, the more refined their search algorithm becomes, the more people use it. Same thing with Uber. If you think about Uber, why Uber is so great compared to the competitors is because when you press the button to order an Uber arrives. And because
also because they're losing money on every ride.
It doesn't matter why, but they have the network effect. Now, up until I would say 2 or 3 years ago, Bitcoin didn't have the network effect. But today, if you look at PayPal integrating it, banks integrating it, Bitcoin has the network effect. Now, any company that has the network effect has so much momentum that generally it can't be stopped. So if you think about Amazon, Netflix, Google, Facebook, they have such a powerful network effect that they can't be stopped.
Right.
The only way to stop it is either by government intervention, which you can see is happening in the big companies,
Could happen,
or by creating a product that is 10x better than the incumbents. Okay? You can't create something that's 10x better than YouTube. You can't create something that's 10x better than Uber. You can't create something that's 10x better than Google. And therefore, they can't be disrupted. And I think the same thing is happening with Bitcoin. I think that Bitcoin now has the network effect. People have wallets. Banks have integrated it, etc., etc. And so it's very, very, very hard to break Bitcoin. In fact, I think from now on, Bitcoin is unbreakable. I think Bitcoin is now where Amazon was in 2002, 2003. And I think that we're about to go on that ride. With that said, my theory is that Ethereum has many more applications than Bitcoin. And so I think in terms of where I think Bitcoin is safer. But I think if you're looking for upside, Ethereum may be a better play. What are your thoughts? Tone, I'd love to hear your thoughts here.
Sure. I don't think those applications matter all that much. So I think there's more to it than network effect. Sure, Facebook has a network effect, and Google and Uber, but they're also the best at what they do. So it's not just about the network effect. I think the biggest thing that Uber has done is fight the regulation to allow Uber. Because if it was another company, they would have been taken down by the, the taxi lobbies, like even Uber has in certain areas. So there's a lot more to it than just network effect. These companies continue to innovate. They don't just sit there and do nothing and rely on that network effect. And while someone else comes out and says, well, we do this better than Uber and do that better than Uber, but those are minor things that are generally irrelevant. So yes, there is something Ethereum does incredibly well. It is the biggest platform in the world to run a scam on top of.
But hold on, Tone. Let's stop there. Do you agree with me that today the lion's share of the venture capital funding is going into Ethereum-related projects?
Because they're just looking to make some money. They're not actually innovating anything. So, and eventually that ends. I mean, there's only so much you can do on making money out of money. We saw this with Wall Street in 2008 that led to a crash. Like we see this all the time. The question is there actual innovation happening under the hood? And my argument has always been there isn't. All this DeFi stuff is just repackaging the same exact thing that has always existed, but under a new brand of we're decentralized, which they aren't, and or at least they are in a way that it only gives additional problems. Like, yes, you're decentralized, which means you can now be hacked, but your decentralization doesn't actually bring anything better to the table. And if you ever get big enough, you will realize that there's absolutely no innovation there. But before you get big enough, it's easier to hack you. So it's all the downside of decentralization and blockchain without any actual benefit, because as your decentralized quote unquote project grows, you realize that you have to centralize it as much as possible. Otherwise, the liability is insane.
So, Tone, are you confirming that 100% of your crypto portfolio still sits only in Bitcoin?
Yes, 100%.
Luke, comments? I can see your eyebrows. You're lifting your eyebrows at Tone.
I mean, Tone doesn't miss the mark by too much there. There are a ton of projects that claim to be decentralized that are very far from that. I think you have to separate. I mean, Bitcoin and ETH are such different bets, right? Bitcoin has that clear narrative. There's nothing that is competing with Bitcoin. Bitcoin is Bitcoin, and nothing's going to dethrone it from being that digital gold. ETH, I kind of look at it as like a venture style bet that's liquid that you can trade. So there are going to be narratives that arise, and whether it's DeFi and you know, however long this has legs, or if it's the actual DeFi coins. I think the other thing to note here that often gets dismissed, maybe by some people that only focus on Bitcoin and don't look into what's happening on ETH a lot, and I can be quite critical of that too, but some of the applications and some of what's being built in the DeFi space on ETH is actually supportive, I think, of Bitcoin. And I think people dismiss that. If you look at the way they've been able to bootstrap liquidity onto decentralized exchanges, we've been calling for the year of the DEX for I don't know how many years. It's never came. And now we have Uniswap, a decentralized exchange that is doing more volume than a lot of centralized exchanges. And I think that's pretty big. And you also have projects like Rune coming in. I mean, who knows whether these single projects stick around? But I think what they're trying to allow to happen to crypto assets, including Bitcoin, letting you lend your Bitcoin, letting you be able to trade that trustlessly, I think is pretty special. I think it can have a big impact. And I think, you know, there's going to be themes that you can trade there, but you have to really separate ETH and these other tokens versus Bitcoin. Bitcoin is money. It's digital gold. These other things I kind of look at as venture style bets that you can trade.
Okay, Matti, your thoughts?
Yeah, it's amazing how kind of everybody, I think, can be correct all at once. I mean, what's happening on Ethereum right now is a real beautiful thing. New economic models are being tested, but I don't think that any of them, as my friend Tone has been saying, have been proven yet. Bitcoin is proven. When we look at it from a simple economics or token economics point of view, I mean, Bitcoin has a very strong narrative. There's only 21 million. You got to catch them all. You know, you get that kind of, digital scarcity and the greed growing, where Ethereum does not have that at all. I mean, it has, buy this or lend me this and you'll get a free shitcoin, which is also an interesting idea and an interesting concept, but it's not as strong as the Bitcoin narrative at the moment.
You know, I think that when you look at Uniswap is one of the biggest innovations of crypto and certainly one of the most important projects for the future. Now, allow me to explain myself here. I think that Uniswap, if you look at how the liquidity is provided by the crowd in the farming and whatever else, I mean, that is a huge innovation. And if you think about peer-to-peer token exchanges, if you think about the real IoT applications, about cars negotiating with one another, about machines negotiating with one another, they're going to need to do it on Uniswap. They're going to need to trade value on things like Uniswap. I think what we're seeing now of consumers, customers like us trading on Uniswap is, well, I think we've
early days. It's like trying to judge the internet in the 90s, and you go, "What is this? There's automatically music playing, and everything is text. It's not, it's not And the banks were laughing at it. We're never going to go online, right? And 5 years later, 10 years later, we see if the bank doesn't have an online presence, they don't exist anymore. So yes, things evolve very rapidly, especially in technology and financial technology right now.
Tone, have you used Uniswap?
No, I have not. I've never used Uniswap. And even with my rudimentary understanding of Uniswap, I will completely challenge their decentralization claims. It's better for me to just wait, because if Uniswap continues to grow, the more they grow, the more they will have to prove that they're not decentralized, just like Ethereum has on several occasions. It can't be decentralized, because someone is responsible for the Uniswap code. Someone is responsible for that. Someone is responsible for paying those developers. Someone is responsible for making sure that it doesn't get hacked, because what makes Bitcoin decentralized, and I don't talk about this enough on my own channel, is the fact that I can run my own full node and I can process my own
Bitcoin was no more decentralized when it was this age. You know,
I was about
right?
to say, if you think about the origins of Bitcoin, I don't think it was that different.
Satoshi Nakamoto and Hal Finney ran the show for 2 years straight.
It was.
Uniswap is what? How old now?
But again,
time, man.
It goes back to the fact that even from day one, I can run my own full node and I can process my own Bitcoin transactions. So I'm not dependent on Satoshi. I just got to be in line with other people in what Bitcoin really is. And that's one of its elements of decentralization. There's, of course, mining, which Uniswap doesn't have. That's another contributor to decentralization. And, of course, the code development. Now, in the beginning of Bitcoin's early ages, Bitcoin's core development was not decentralized at all. It was just Satoshi, and then it was Satoshi and one other guy, and then it was Satoshi and two other guys, until eventually Satoshi left, and it was like 10 people. And now it's hundreds of people. But that's one element of decentralization. That doesn't make Bitcoin.
So that's what I was getting at exactly there. Because when you say it's not decentralized, or something is or is not decentralized, I don't think that it's an on-off switch. It's not black and white. Decentralization is an entire slider with scales. You can't say is or is not. It's a gross oversimplification.
Well, Matty, you're right. It is a slider, but in Bitcoin, it's a slider. It's a triangular slider because there's 3 points to a triangle. One of these points in a triangle does not make Bitcoin centralized or decentralized because we're talking about the coding. But there's also running your own full node, and there's also mining. Now, something like Uniswap doesn't have mining. And something like Uniswap, as far as I know, doesn't have the ability to run your own full node. So when it comes to talking about decentralization of Uniswap, you are talking about just 1/3 of Bitcoin's decentralization. And now it is a horizontal slider based on who's responsible for the development, which in the case of Bitcoin, even from day one, with Satoshi's, maybe on the first day, when Satoshi was one of the only nodes and was the only miner and was the only developer, Bitcoin is centralized. But that disappeared within a few weeks because other people ran their nodes and other people started mining. Something that's a project like Uniswap doesn't even have. So it's completely dependent on development.
Okay. Guys, I think what we're going to do is we're going to continue this conversation. Just a reminder that if you do want to join the show, you can call in. Our WhatsApp number is on the website. The website is www.cryptobanter.com. You can also telegram us at @cryptobanter, and you can join the show live. You can speak to Tone, to Matti, to Luke, and to some other guests that we're bringing online. I'm going to take a break from you guys, and I'm going to bring in Adrian Bashuk. You may know Adrian because he was my producer at CNBC, and he's been trolling the social media channels and looking for the best of social media. Adrian, welcome back.
Thank you, Rand. Thank you. We've got some callers on the line who are wanting to get in on the action here. And I'm going to bring them in a second because we've got a fire drill where I'm at. So you can probably hear me there in the background.
We're going to take a little break and we're going to go back to Tone and Matti. I hope the fire doesn't burn you down. Hopefully you can make the show. Guys, welcome back. Luke, in 2017, you were trading like a cowboy. I mean, you were trading every single altcoin that you could trade. Are you doing the same thing now?
No, and I don't think it really makes sense to. In the past, when we had alt seasons and really any kind of alt rally, it was this giant slosh of money that would move from Bitcoin. It would kind of spread between 10, 100 alts, and you would see broadly the alt market would do well together. And we're not seeing that this year at all. I think disparity has been a really big theme, and that's been huge the entire year. You have basically DeFi, where all the mind share has been, for right or for wrong reasons, that have been doing very well, and kind of the old ancient coins just aren't, right? You aren't seeing ETH rise and then EOS followed by Litecoin, followed by Ripple. It used to be a very kind of simple flow of these things would move together. Correlations would be almost one. We're just not seeing that. And we're seeing this very select group of coins, and it's almost as if that giant slosh of money that used to flow into 100 coins is now kind of only focused on these 10 or 11 coins. So really only focused on the kind of that DeFi sector, and then ETH and the majors exclusively.
are you trading any of the DeFi coins?
Yeah, looking at quite a few right now. I'm looking at Comp, getting the chance to speak with Robert Leshner tomorrow. But as I said, it's a daily, it's a weekly thing, and it's mostly based off if YFI can keep doing well, if Aave can keep doing well, then what other coins were leaders previously in the DeFi run, and can they do well again? It's a strange thing when Bitcoin's this strong and you have altcoins that are also showing strength. I mean, you can't ignore that, even if you don't think they're decentralized or it's wrong or whatever it is. In some points, if you're a trader, you have to be a profit maximalist. And if those coins are going to move, I'm going to look to trade them.
Well, look, on the hour today, we're going to be running a full section on DeFi. In fact, what we're going to be doing is teaching people how to yield farm from scratch, from setting up your MetaMask wallet right through to staking your coins and then claiming your coins. We're going to do a step-by-step guide on DeFi and on yield farming. Luke, is YFI the barometer or the Bitcoin or the index for DeFi at the moment?
Oh gosh, I don't know if I can call anything the Bitcoin of X. I'm going to stay away from that analogy. I get what you mean, though. I think as a gauge maybe of DeFi strength, I think you could use YFI. I think you can also use Link. But yeah, YFI and Aave have definitely been the leaders. I think there's quite a few other Synthetics and Rune that have shown strength with those coins as well. I think if you can kind of look at that DeFi blue chip index, there's probably 10 or 15 of them that outperformed during the DeFi run in August and July, really through August and September. Those are the coins to look at. Is DeFi doing well? Are these 10 coins doing well? If the answer is yes, then take a pick.
Are you yield farming? Are you putting money into liquidity pools? Are you making other tokens? It seems very much like the 2017 ICO boom, right?
Yeah, it's one thing that I avoided. I don't have the resources to diligence any of the contracts. I realized really quick it was, if you were fast enough, if you were smart enough to figure it out, if you had an edge there, then yeah, you had a way to get this yield and maybe you could calculate downside. But for me, I would look at the APY and whether it was 100% or 10%, I understood what that was. That was kind of linear. I understood what my upside was, and my downside was kind of always 100. I could always get rug pulled. The contract could always get exploited. That's not a game where I have any edge, so I'm going to avoid. I would rather make a bet on the coin where I can actually define my risk.
I mean, I took a chance on one of the coins, and that was a coin called Sashimi, which was the fork of sushi. And
how'd that go?
I farmed a whole lot of coins. I found a shitload of coins, and I made a shitload of cash. And then it was at $6 when I went for dinner, and I thought, okay, as soon as I get back from dinner, I'm going to cash them out, and I'm going to go to Uniswap, and I'm going to swap my coins back for money or for ETH. And bang, when I got back for dinner, the thing was on 10 cents. And it went from $6 to like 10 cents. And the cost of gas, the gas fees were going to be more. The gas fees of redeeming my coins were going to be more than the coins were worth. So today, I think I sit with a whole lot of sashimis.
Rotten sashimi.
Yeah. Mati, have you yield farmed at all?
I have not. Several of the analysts on my team have, and they report back to me. Honestly, that's something that it requires a lot of time and dedication, and I'm trying to build a company here. Okay.
Mati, tell us a little bit about what you're doing, what you're building.
So quantum economics is a three-pronged attack as far as financial services is concerned. So it's analysis, advisory, and money management. We already have a very strong team of analysts, each with extremely strong background in their particular field. Within also the traditional and of course in crypto. Advisory, of course, is where we help companies and projects who are starting out gain more knowledge and insight and exposure. And money management is something that I'm building fervently at the moment. I hope to have some announcements within the next month or two. For now, the money management is all done on eToro, where we're managing $770,000 at the moment. So yeah, it's pretty complex, but that's it in a nutshell.
Tone, I know the crypto circuit has died down given the COVID and the related restrictions. What are you spending your days on? Are you trading all day? Are you still educating people? I know a lot of your life was traveling around, going from conference to conference. Where are you at today?
I'm still trying to do my one video a day. And other than that, to be honest, I'm kind of depressed about the future of society and where it's going between the COVID lockdowns and governments taking on more power, removing your rights of any kind of freedom, trying to keep up with this election insanity. I don't know if you want to get into that mess in the US. It's just unfortunate. Like, there's no good outcome, basically. I'm not going to... obviously, people that watch me know who I want to win, and they should know what I think is going to happen. But there's just no good outcome that I also think is going to end very, very badly for society. No matter which side ends up sitting in the White House, when it's all said and done, it's just like the damage has been done with what's going on. And I haven't done anything. I'm too lazy to actually work at the moment, other than just doing a video. I mean, it's a shout out to you, Maddie, for putting in all this effort and building something, the stuff that I was doing, all throughout 2015, 16. My path into Bitcoin was rough because that's what I was doing in 2015, 16. And you would think that building your business at the lowest price of Bitcoin is a great idea. In a way, it's not, because I had to use my financial resources to build out my business, which is why I wish it was the opposite. I wish I had a nice paying job to convert that salary into Bitcoin instead of, things.
You'd be a great employee, Tone. You'd be a great 9-to-5 employee. I can see you following all the rules and submitting your credit card slips, and I can see it happening.
So I'm not doing much right now. I'm dying to start traveling again and speaking at conferences, and we'll see what happens from there.
All right, we've got a caller calling in. His name is Johnny. Johnny, welcome to our show. Welcome to the first episode of Crypto Banter. Thank you for calling in. You're our first live caller. Johnny, who do you want to speak to, man?
Yeah, I'll put it up for the panel, but thanks for having me, Ron. Appreciate it. Hey, guys. So 2019, or I've been in crypto since 2017. I was part of a hedge fund that clearly underperformed Bitcoin. So last November, decided to pull everything out. I went 80% Bitcoin, 10% ETH, and then I have my legacy, shitcoins. So I'm currently sitting at about 80% Bitcoin, 10% ETH, and then another 10% in DeFi. So that includes Wi-Fi, DOT, and SNX. So my question to you is, of your overall portfolio holdings, what percentage do you truly hold, and what percent do you trade?
Wow. Okay. So I'm going to start with Tone here, because Tone, I know that you're the trader. I mean, you're the guy who's in and out all the time, but you're also a Bitcoin bull. So it's not like you're holding Ethereum or anything else, right?
Right. So my answer is very, very simple. I hold, and all my trading is done in tax-free retirement accounts, IRAs, Roth IRAs, and my only tool for that is GBTC. Whatever, and that's self-directed. And before I was trading other stuff like options, but lately, just for fun, now that the bull market is here, and I had a lot of good success in the last bull market of 2017. And something that was said earlier in the show, I was able to call the tops and pullbacks very nicely in 2017. I called the $3,000 top perfectly, not because it was 3,000, but it was my other metrics. Same reason why I think we're a little toppy now. I was able to call the $1,800 bottom off of that, even though I really wanted 1,300 because that number has been bothering me for 5 years now. Same thing at 5,000, and then calling the top at 5, calling the bottom at 3. And then I called the top at 75 with the bottom at 5, and that's the one I missed. We did top at 75. The bottom came in at around 5,500, so I missed my re-entry. Like I did the first 2 times. I had to re-enter at around 7.5, 8, and I kind of ran that up a little bit, but I started to get nervous. So I'm okay just trading my retirement account in GBTC and not touch the actual Bitcoin. The risk of exchanges, especially unregulated exchanges, is too high. I would never put more than 5% of my HODL position on an unregulated exchange, and I put 0.
Tone, what percentage of your wealth today sits in Bitcoin?
It's a decent amount, but I don't have that much wealth because, like I said, a lot of my wealth was used to build out my business. But it's a fair amount. I don't trust any other stores of value. In fact, I'm thinking of selling property here at these prices if the property prices are still kind of high. But it's a fairly large percentage. But that's because I understand how Bitcoin works. I understand the fundamentals of Bitcoin, and I am comfortable with it the way I'm comfortable with the internet.
Awesome. Luke, maybe you can give some insight to Johnny about how your portfolio works, what part of it you trade, what part of it you HODL.
Sure. I don't worry too much, I guess, about the static, 20% to trading, 80% to holding. I think the most important distinction is to not have too much of it on exchanges, to have it off the exchange if possible, and with the ability to use leverage nowadays. And you don't have to use leverage. I actually think most people shouldn't use leverage, but it does allow you to only have to deposit 5 or 10% of your portfolio and trade around with that. And for most people, that's all you need to be doing anyways, right? That's kind of how I view it. I think there's going to be times where the market will call for being able to trade a little bit more of that stack, but then it comes down to, how much time are you spending on this? Is this a full-time thing? And if it's not, I think just being a long-term Bitcoin bull and investing in an asset that has a tendency to go up will do very well.
Johnny, is this a full-time thing for you, or is this a hobby for you?
No, it's more hobby than full-time, which is, if you watch the pros, they effectively can't trade profitably. The vast majority, 95% of folks can't trade crypto, my opinion. So
yeah, I think if you look at it, HODLing has been the best strategy. I think there's no doubt about that. If you held your Bitcoin, I think there's an interesting stat that says that if you bought Bitcoin on any day ever, except for 4 days in 2017, you're up on your investment. Now, how many other assets can say that?
Yeah, not many. Well, here's another question. Luke, maybe this is for you, but let's talk Uniswap, for example. There's great value in being a liquidity provider, as you take a % of fees. But at the end of the day, there's really no value in a token. Today, there's not. And it has a massive supply, and it's centralized. So how do you think of a token like Uni?
So yield farming, liquidity providing, and liquidity mining, those are all kind of things I've avoided just simply because I think your upside's kind of capped. I don't fully understand the mechanics. I understand conceptually what impermanent loss is, but it's not really a risk that I can diligence, and I'd rather bet on coins that have pretty insane upside when DeFi is doing well. Your upside really isn't capped like that, and I think you can manage the risk much better. In terms of choosing which coin is going to have value long term, it sounds funny, but that's kind of something I spend a lot less time doing. I'm really just looking for momentum, for a theme that's going to survive, and looking to play kind of those. If I am swinging, I'm looking at if the DeFi coins are moving, then which DeFi coin do I think can also move? I think there's so much talk that about beating the market, when in fact you just kind of have to be exposed to the market. That in crypto that does very, very well. So find the market that you want to be exposed to, whether that's Bitcoin or whether that's specific theme, you'll probably do pretty well just doing that.
Matti, over to you, the same question. What percentage of your portfolio are you HODLing, and what percentage are you trading? And I'm going to follow that question up with another question to say, in the portfolio that you're HODLing, what percentage is in Bitcoin?
Yeah, in my case, it's more like portfolios. They've got a lot of different trading accounts. The one that's public is on eToro, and you can see the link to that in my website. I think it's about half. Half is HODLing and half is trading. Right now, it's 100% in Bitcoin. Obviously, the Bitcoin market cap dominance has been rising steadily. But what I would like to say, as far as portfolio management is concerned, I do think that a lot of people in the crypto world completely underestimate the power of diversification. And, am a strong advocate that people should be holding stocks and shares, especially if you're thinking about a long-term portfolio. The idea that HODLing is better than trading is not new. This has been in existence since I was a lad. And I remember when I first got my job in a broker, I was astonished to find out that of that broker, only less than 1% of people actually managed to make money. It's not new to crypto. This is something that's been something that's been a big part of trading for a long time, but that over time, the people who park their money and leave it there, those are the people that end up making money. And I think Warren Buffett said it best when he said that you don't make money buying and selling shares, you make money while you wait. And of course that applies to crypto as it does to so many other parts of investment.
Johnny, does that answer your question?
Come again?
Johnny, does that answer your question? Have you got what you need from our panelists?
Yeah, no, I appreciate everybody's thoughts. And if you guys have any, like your fastest horses, I guess if you close the show at some point, I'd love to hear any thoughts on, outside of Bitcoin, where Luke's keeping an eye on and things in the future. But I appreciate everybody's time, and I do love the work of all you guys. You do great work for the crypto space, and Tony Vase, you've called a number of shots right. So I do follow your work. So thank you.
Thank you.
Yeah, he's called very few right. Unfortunately, one of the ones that he called right was on a bet against me. And I have to thank COVID and the lockdowns. So I haven't been able to repay my dues here, but I do owe Tone a stake. Tone, what was our bet? We took that bet at consensus. And I think Bitcoin at the time was about $6,500,
I think it was 7.5, pushing towards 8. It was in May of 2019.
And what did you say was going to be? We said 4,000 or 3,500. What was it?
It was like 4.5. I said it would drop about 50%, and you said below 4, but I got you pushed up to 4.5. But I would have won the 4-1-2 because we just fell below that.
I'll definitely take you for a stake. Just as soon as these lockdowns end, and with a new government in place, I think these lockdowns may be here for quite a while, right?
I'm spending my December in Florida, where the governor is actually normal and potentially human, unlike most of the rest of the U.S.
Alrighty. Luke, Johnny was asking for the outliers, the tokens that you're looking at outside of Bitcoin.
Yeah, it's hard to make a pick right now. I'm not looking at any chart or trying to time anything right now, but just one of the things that I've tried to do, look at what's leading. And I think it's much less important about predicting what's going to lead next, or even trying to jump on these as they're ripping. But if you look at YFI right now, you look at Aave right now, you say, okay, why are those doing well? Well, they probably were kind of taking up a majority of the mind share last DeFi run. They're still doing that right now. And so, what other coins fit that exact same kind of bill currently that maybe haven't moved as much? Looking at things like Comp, looking at things like Link. Rune just came out with something pretty big that I think will be beneficial to Bitcoin as well. So, it's going to be a very kind of shorter time frame thing than most investors are looking for. But I think we're at a really interesting point in the crypto market where there is that disparity for alts, right? And it doesn't come often. Usually everything is very correlated. You can't really, capture upside unless the entire market moves. And that's just not what's happening for DeFi. There are kind of these random pops. So if you trade full time, I think there's going to be opportunities. But as I said, I also think there's so much focus on beating the market or picking that one coin that's going to do well. And I just think that's much less important. Crypto gives you so many opportunities, so many cycles where we see much greater performance than any other asset in the world. So if you're a little bit exposed to DeFi and DeFi coins are doing well, that's fine holding a DeFi index or holding 5 or 6 of those coins. As long as you hold one of them that's doing well, you're probably doing pretty well. And holding a majority of Bitcoin always helps out too.
Luke, what percentage of your holdings today are in Bitcoin?
What percentage? More than 50%.
More than 50%
yeah.
in Bitcoin.
Yeah.
Okay. And how much of that lies in DeFi?
a very small USDT or Bitcoin, and then it'll move into those DeFi coins. I don't really hold any alts as a long-term hold or hold them through a cycle or anything like that. That's something that in 2017 previously, I would have said, sure, let's hold this through a cycle. Let's see. But over time, Bitcoin's shown that alts can maybe have a 3 to 6 month window, if that, and then they kind of get knocked down by Bitcoin. And I think you have these spurts where if the volume's there, if the theme's there, if the narrative's there, then the alt can do well for a month or 3 months or whatever it might be. But other than that, I'm going to be sitting in Bitcoin or cash.
So I'm looking at the WhatsApp link for the show now. I've got some questions here. Someone's here is asking, are we going to have another altcoin run like there was in 2017? Are people going to move money from their holdings, from their Bitcoin profits, and move it into altcoins like 2017?
I mean, I think it's happened, right? It already happened this year before this Bitcoin run that really kicked off in October and really accelerated. Then we had a DeFi run. That was the parabolic run for Bitcoin or for crypto this year. Started back in April or May and ran all the way through August, September. I mean, DeFi coins were doing 10, 20, 50x. It wasn't in the same style, right? There weren't ICOs and private sales, and they would pop when they get listed on Binance. It was a little bit of a different flavor this year. But we have seen outperformance for altcoins. It just hasn't been a broad market, widespread outperformance by all altcoins. It's been a very select sector, and that's been DeFi. And right now, it's only a group of 5 or 10 coins. I think that's
okay.
That's maybe how it's
so if you were holding some alts from the 2017 run, I don't know. I mean, I'm trying to think of what they were. I think it was Tron, things like EOS. Wax token, all those altcoins. Would you hold on in the hope that some of them may run, or do you think it's time to sell and then put the money back into ETH or even into Bitcoin?
Oh gosh, I don't want to give anyone trading advice, but yeah, the way I look at alts is they're a trading opportunity. They're short time frame. I think they have to be viewed in a completely different light than Bitcoin. So if I'm holding a 2017 token that did an ICO back then, there's probably a greater than 90% chance they're doing no development right now. I'd probably rather have that in cash or in Bitcoin and free up that capital, for a trading opportunity that could be coming up and something that could actually do well, something that actually has interest and volume right now. I don't think we're in the 2017 widespread dinosaur coins are going to move. I think we're in a very select group of coins are going to do well, and there's going to be disparity, and that's your chance.
Matti, if you were holding altcoins from 2017, what would you do with them today?
I think that the world is a much different place than it was in 2017, and we've learned a lot of lessons from that pump and dump experiment. And I think that Luke has kind of hit the nail on the head there. Maybe you have a 3 to 6 month window in trying to be the first one on the train, or else you might end up in the caboose, as they call it in the DeFi world. And you don't want to be the last one on the train, because if you're the last one on the train, you're the bag holder. And I think that that's, people have realized that, and more and more people are coming to that realization. And I think that that's why we're seeing the Bitcoin dominance rising so quickly lately. And I think that it's going to be very difficult for any kind of utility token to make those type of gains again in the future. I think it's not. I mean, it would have to be something that the utility token was so profound that it made something new. But you've basically got 10 different versions of Ethereum out there, and I don't think that that's a very sustainable investment thesis as far as I see. And I think that the entire market has come to that realization already.
So effectively, if I get what you're saying right now, it is you dump those coins as quickly as possible. Don't be the last guy on the train.
I still have a bunch of kin tokens, to be completely transparent, and that's because they got locked up in that court battle or whatever. And my investment wasn't that substantial that I'm going to run to try and convert them. But other than that, I've got nothing left. I mean, I've sold off the last amount a long time ago.
So, gentlemen, we are running out of time. Thank you very, very much for your time. Much appreciated. Tone Vase, Luke Martin, Matti Greenspan, thank you so much for joining our first Crypto Banter show. Johnny, thanks for being our first caller. What I'm going to do now is I'm going to
one quick comment. I couldn't disagree with you more, Maddie. I don't think any lessons were learned in 2017 and DeFi. So,
All right, we can argue that point at a different time. Good luck, Ron. This is great. It was a lot of fun. Thanks for having me.
Thank you, Matty. Matty, what I'm going to do now, thank you, guys. Thank you, everyone. Adrian Bashuk, I'm going to bring you back into the stream. Are you still alive? Has there been no fire? Where you at?
No fire. It just knocked out power for a bit. So they said it was a fire drill. We do think it was an actual fire. What are you going to do?
Oh, okay. Now, Adrian, you've been on Twitter, you've been on Telegram, you've been scouring the social airwaves to tell us what's going on. And that's really where all the banter happens. The banter all happens on the crypto Twitter and on Telegram. What's going on the social networks?
Well, I want to tee this up where I think you have an interesting opportunity here because we have a lot of decentralized components in the conversation around crypto in our world today, right? You've got mainstream media covering it from afar, really not giving it the attention that it deserves right now in terms of price action, but forget about price action because culturally, let's go under the hood. And you've got the crypto telegram world that's this morass of trading groups and people talking and an incessant kind of hum of trading banter and trading talk and action and people really executing actionable trades within Telegram. And then you've got crypto Twitter, kind of the headspace of Twitter. And you've got Bitcoin OGs mixed with institutional investors now and influencers and you name it. We want to kind of put our finger on the pulse of crypto Twitter. So we'll be doing a recap of some of the thought leaders, the market movers, and the decision makers, really going under the hood of crypto Twitter. So I think, Ren, we can roll the video and take a look at what's going on in crypto. Welcome to the Social Sentiment, where we'll take a big macro view of crypto across social to see where we're at now and where the market could be going. We're going to check in with thought leaders, market movers, traders, and influencers daily to give you a wide swath of the market action, market influence, and market musings. Let's start off with the social headlines. Clearly, biggest news of the week, Bitcoin hitting 17, then 18K, coming back down a bit, but we're hovering around that level. The macro, Pomp coming in with possibly an even more important figure. Bitcoin just hit a $325 billion market cap. And a congratulations in order, he says, agreed. Meanwhile, David Gokhshtein puts out just 3 words, alt season is coming. We can only hope. Prompting, Big Barry Silbert from Grayscale reminding us Zcash is having hashtag all season things. And in institutional news, the Winklevoss twins announced Gemini is onboarding financial advisors. Further insinuations, the institutions and the retail herd are coming. Perhaps? Then, the Mooch is insinuating, and the BTC Times reports their billion-dollar fund Skybridge Capital may, quote, seek exposure to digital assets, including Bitcoin. The Mooch. And why wouldn't he? Just run the numbers. I mean, Kraken tweeted year-to-date, Bitcoin is up 150%. Wow. And remember, the Blockport remembers, the media called Bitcoin dead. Dead. Look at it now. Next, the political slant. Speaking of the media, Bitcoin Magazine smartly reports on the election writing, Bitcoin responds to American vote of no confidence in electoral politics. Their writer quoting, as a contested election deepens a crisis of legitimacy, Bitcoin presents an alternative to the existing system of governance. And just think, elections could run on the blockchain, like Decred. Apparently, according to Decred itself, its blockchain tech was used in parts of Brazil's election, touting its low cost for transactions and focus on governance. Imagine that, a transparent and mutable ledger recording all votes cast. Novel idea. And in international affairs, an ex-Coinbase CLO and now U.S. Comptroller on Currency was erroneously putting out there that Bitcoin is controlled by China, noting Bitcoin is a, quote, geostrategic competitiveness issue is a very good thing for Bitcoin. May be true. Even Ray Dalio weighing in on governments banning Bitcoin. And Jack simply says, no. Good going, Jack. And all kidding aside, and on a serious note, let us not forget, along with Mike Novogratz, whatever the politics, a pandemic rages on and people are suffering, health-wise and economically speaking. So if you can, help where you can. But let's not end on that note. Instead, on a philosophical bent. First, Samson Mao's The Crypto Dilemma. thinking most Bitcoiners aren't really excited seeing Bitcoin at 17,000. It's kind of expected or an about time kind of feeling. That Kurt Cobain smells like Teen Spirit kind of feeling, I guess. Michael Saylor waxes philosophically on the arc of history, saying Bitcoin isn't a train leaving the station, it's an arc to avoid drowning in the currency flood. Or is it? Dr. Bitcoin asks, perhaps it's just the whiskey talking, but does anyone else feel that Bitcoin has a metaphysical component to it, that it was released into human civilization at the perfect time, just as we approach the brink? Heavy. Who cares? Cheers to all of you here to witness this. As Ryan Sean Adams, who cares? Cheers to all of you here to witness this. As Ryan Sean Adams writes, crypto is such an odd combination of zealots, builders, scammers, dreamers, visionaries, salesmen, pirates, suits, geniuses, morons, bankers, and revolutionary. Truly the Wild West in our times. Again, cheers across the social sentiment.
Well, Adrian, you've been busy on the Twitter airwaves. I'm really looking forward to your show tomorrow, or for you joining us back tomorrow and telling us what's happening on Telegram, because we want to know what's happening inside the trading groups.
Yeah, that's a bigger, as we said, macro view and really looking at the headspace of crypto Twitter. But let's go under the hood of crypto Telegram tomorrow and see what people are trading, because that's what we're all here for.
All righty. Well, on the hour, we're going to be joined by a good friend of mine, someone who's in DeFi, and he's going to be talking to us about DeFi yield mining. So if you've ever wanted to yield farm or yield mine, after the break, we'll be gone for 5 minutes. We'll start again at 6:10. We're going to be talking about DeFi and how you can actually make money by becoming a yield farmer. Join us just after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Winston the Wolf.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Winston the Wolf.
Crypto Banter is the world's first.
Aha, there we go. Winston the Wolf, welcome to our show. I'm so excited to be talking to you again tonight, and specifically because as I look at my WhatsApp, YFI is trading at $28,000, and this is a coin that is has become the mothership for DeFi or for yield farming. And if I remember correctly, it was launched at somewhere around $3. Am I right there?
Well, you could actually get that one for free if you deployed some capital and yield farmed it when it started. So yeah, it hit the market at $3, but there's a lot of people out there who got that one for $0.
And the high was somewhere around $50,000, right?
It tapped on 50K when it listed on Coinbase.
All right, so there's this big wave, and this big wave is what they're calling DeFi or decentralized finance. Give us a little bit of an overview of what this DeFi wave is all about.
Well, it's essentially just what you get in centralized finance or traditional finance, but with decentralized components to it. So savings, loans, trading, insurance, those sorts of products. But it's not a matter of just the technology itself being decentralized. I'm happy to sit here and argue the point with Tone Vase on that one, because as we all know, decentralization is a spectrum. But it's the capital, the underlying capital, which is also decentralized. Ours, the space is crowdsourced liquidity.
Okay, so let's take a few steps back, because I know that a lot of our listeners here are beginners, and a lot of them, when you mention the word DeFi or yield farming, they have no idea what we're talking about. So if I take the first part of what you said, is you said that DeFi is actually everything that you get in centralized finance, but decentralized. So am I right in saying that there are these smart people that are building protocols or automated software systems that perform the same function as a bank or as a financial services company?
Pretty much. So it comes down to the underlying code base within. So that's taking those humans out of the equation, or those institutions, and allowing people to interact directly with code.
So are we saying that most functions that humans can do in a financial services environment can actually be done by a piece of software, and probably be done better?
Surprisingly, yeah. And I think that's one of the reasons why there's a little more money in it for the people in DeFi as opposed to centralized finance. There's not as many hands in the pocket.
Okay, so let's talk about these protocols. You get these smart people, they write protocols, and I think for today's discussion, let's talk about two types of protocols. One kind of protocol is an exchange, and actually, if you think about what an exchange or a protocol for an exchange is, it is, if I have a coin that you want, we need a middleman, or we need a piece of software in the middle to match us, or to take your money and to take my money and to give your money to me and my money to you, right?
Exactly. So as Luke mentioned before, it's the DEX arrival, the thing that we were talking about probably in 2017. That's really finally come to the forefront of crypto. So Uniswap released their V2 in about May of this year, and that's one of the things that really kicked things off. It brought the functionality that was kind of missing from some of the other DEX infrastructure that was out previously. And since then, it's brought the liquidity. And, as we know, everything in this space, it's got that underlying liquidity component to it. And that's where the decentralized part of it comes in past the technology is, someone like me or you can supply liquidity to a coin on one of these platforms, Uniswap being the example here, and we can help facilitate the trading of, or the swapping of, as it were.
So what I want to do is I'm actually want to show our viewers right here on my screen. This is the Uniswap interface. And if you look at Uniswap at its very basic form, it's basically a platform where you can swap one coin for another coin. So you see on my screen here, it's asking me if I want to swap Ethereum, and it's asking me which token do I want to swap Ethereum to. And in this case, I'm going to
Cody there. Yeah, definitely, bro. That's a good choice.
I definitely do want to buy some Cody, definitely. Now, Uniswap. Is Uniswap a decentralized protocol?
Well, that's the topic of debate that Tones was bringing up before, right? Yes, in its very essence, it is. I mean, I'm not going to get into the whole spectrum of decentralization, but essentially it comes down to, in my opinion, like the custodial aspect. When you trade on these things, you trade with full custody of your assets. So that's the main difference, obviously, between a decentralized exchange and a centralized exchange, is that the centralized exchange has ownership over your assets because you don't own the private keys for them. There's an old adage in crypto, not your keys, not your crypto.
Okay, so amazing. We now have this exchange. How do people yield farm at this exchange? Or how do people, when they talk about yield farming, talk us through what this concept of yield farming actually is.
Well, yield farming is something which has only recently been introduced to Uniswap. So probably the first thing that's interesting to talk about is what you actually get for supplying liquidity to this. So in this context here is that when you go through to supply liquidity to the Cody liquidity pool, is that you need to match up 50-50 the dollar value of Cody to the dollar value of Ethereum. For the pleasure of doing so, when people trade on the platform, you earn a fee as a result of that. It's 0.3 on Uniswap. What you've got there is, and you can see rewards have recently ended on this, and that's an interesting one because a lot of liquidity is now moved over to SushiSwap, which we'll talk about in a second.
But essentially, if you think about the concept of yield mining or yield farming, what you're saying is if you are willing to provide liquidity to Uniswap in such a way that when their customers come, they can trade and they will have liquidity, you'll be rewarded for that. What do you get rewarded with?
Well, you get rewarded in trade fees initially, and when the rewards period is running on Uniswap, you get their own token. So you get an extra benefit on top of the trade fees that happen as part of that liquidity pool.
And do you get this in US dollars or do you get this in Uniswap tokens?
You get it in Uniswap tokens, but you can swap them for USDT on there.
Okay, you wanted to talk about
at the moment because it seems to be on a little bit of a run, but you can do what you want. You can swap. You can swap anything there. I mean, the fields that you've selected. You can swap Cody for another coin. You can swap Cody for Uni if you like.
But you can only do that if someone else is there and providing liquidity, right?
Exactly, and that's the whole idea behind this rewards incentive that's put in place for DeFi is that we're crowdsourcing the liquidity, but we're rewarding participants for doing so. Okay,
I want to talk about another project, and I'm going to put it up on my screen. You may be familiar with this project. This project is called Harvest.finance. What does Harvest.finance actually do?
Well, you brought up YFI before, and Harvest is kind of like a derivative, let's call it, of YFI. So both those projects, they actually act as, let's call it like a automated hedge fund in that regard. So these go out and they exploit or utilize other DeFi protocols and do the yield farming for you. And you supply capital to this. And as a result, you get a higher APY, or most of the time, than you would if you went out and kind of did that yourself. And it takes a lot of the complexity out of the whole equation as well. So this is like noob-friendly yield farming, if you want to call it that.
Okay, now what's confusing me here is there's a whole lot of different things that you can have here. That, for example, it says here, you can stake your WETH, your wrapped ETH, and you can earn 3.77% per annum. Or you can stake Sushi ETH DAI. What does that actually mean?
Oh, well, you've just got the choice. So essentially, these guys are running different strategies. So the Sushi ones have just actually been added to the platform because Sushi's started up a rewards period as Uniswap ended theirs. And these guys are actually running an automated strategy across that where they'll take your capital here, they'll go out and deploy the capital, they'll farm on your behalf, and then pay you a clip as a result of it.
Okay, so I think I've got it. So when it says Sushi ETH DAI, what it means is if you're willing to stake your ETH and your DAI in equal proportions on the Sushi DEX, then you will earn 13.53% per annum, right?
Of course, but as you can see there, what you've highlighted over there is on this particular platform is they'll auto harvest the Sushi for you, and you'll get paid some of that APY in the farm token itself, which again, using the Uni example before, you can then go and sell for USDT.
Or you can stake your farm token, right?
You can, and that's an interesting one of this platform is if you stake farm tokens on here, you get a profit share in regards to what they're out there doing. And I think on this one, it's either 30 or 70%. It's one of the two of the splits. So it's like actually, as you can see there from the APY, much more lucrative than some of the other ones. The issue being is that, like farm could be considered like a relatively volatile token. So whenever you're doing this sort of stuff, there's a question of the underlying assets itself. And it kind of comes back to that impermanent loss thing that Luke brought up before, where, this quote's 161%. That's currently at the fixed asset price. If farm goes down, then that figure is obviously significantly less.
So I have a question for you. You can see that I've got some staked farm tokens, which I'm farmed in the beginning. And as you can see, the amount is growing. And it's growing. You can see the ticker growing, seems like quite quickly.
It looks like you can pay for that stake for tone quite easy there, bro.
Yeah, but I don't understand how that equals 161%, because at this pace, it will never, ever almost triple in 365 days.
Well, it's assumed, so this is kind of the trick with any of this sort of stuff is that part of the issue with these quoted figures, the APYs and the APRs and that sort of stuff in crypto is that it assumes that you're going to have money in the platform and the platform's going to be doing exactly what it's doing now for that entire period. The reality of it is that just doesn't happen.
Okay, so I think all of our viewers, what they want to see here today is they want to see they want to see us actually yield farming. So just before we get there, if I'm understanding what I'm seeing here is I'm seeing a whole lot of tokens that you can give or you can put into Harvest. And when you put these tokens into Harvest, Harvest will then go and farm yield for you. And when they do, you'll get a reward, and you'll get the reward in a mixture of cash and farm tokens, right?
Correct.
Okay, amazing. Now, Evan, a lot of our users want to know how to yield farm. Can you take us through a step-by-step guide of how to yield farm?
Sure, let me just screen share here.
A lot of our users have been asking us in the chat, how do we actually do this? What do we need to do? How do we put money into the yield farms? This is the moment you've been waiting for.
Have you got my share up now?
Okay.
Can you see that one, buddy? Okay.
No.
Let me do another one.
We got Mr. Winston Wolf all the way from Australia.
You got this one, buddy?
I got it. Let's share it.
All right, cool. So there's obviously an underlying assumption here that you've got MetaMask installed in your browser. Now, MetaMask is kind of like the Swiss Army knife of DeFi, let's call it that. Obviously does a few things outside that, but in this context, this is what we need. You can install this in Chrome.
So MetaMask is just an Ethereum wallet, right? And it's an Ethereum wallet which lives in your Google Chrome browser.
Well, let's call it an ERC20 wallet. It manages the ERC20 assets.
Great. Okay, so you install MetaMask and tell us what happens in.
Well, you have to fund the wallet. So, like, there's an underlying thing that you need when you do DeFi farming, and that's Ethereum. All of this DeFi stuff in the space, or 99% of it, is based off ERC20 protocols, and as such, you'll need to pay gas fees. That's paid in ETH. So the first thing that you need to do is pop some ETH.
Has Ethereum really taken that much of a lead in the DeFi space? Are all these protocols actually built on ERC20?
Like I said, like about 95% of them are. There's some layer 2 solutions which are coming out now, which attack the underlying issue of gas prices. But yeah, it's like predominantly all their liquidity is locked in Ethereum at this point in time.
Okay, so let's have a look at how. So now you've got your MetaMask installed. Winston, tell us what you do next.
Well, yeah, obviously, I want to pick the asset that I'm going to yield farm, and that also obviously has to be in the wallet. So I've got a wallet here with a few things in it. I'm going to connect this wallet up, and that's going to give me the ability to stake some assets on here.
So now the Harvest protocol is actually talking to your MetaMask wallet and saying, hey, in Winston's wallet, we've got X amount of assets.
Exactly. And in this case, I'm going to do stablecoins. So as I spoke about before, there's an issue with any of this sort of stuff where you've got to worry about the asset that you're using to farm and its volatility. If you use a stablecoin, it takes a lot of that out of the equation. It's obviously not as lucrative along the way, but sometimes a simple life is a bit better. So in this case, we've got a bit of USDT here. So the benefit of this one is that it does a lot of hard work for the user. So you could actually go through and do quite a few things on this, but I'm actually just going to hit this deposit and stake button. This one's going to go out and it's going to use another DeFi protocol called Compound. It's going to farm those tokens for us. So that's where our capital is going to end up. And it's going to give us a few farm tokens as a result. So cumulatively...
Okay, so slow down. What you're saying is you're going to give Harvest $1,000. They're going to invest that $1,000 for you in Compound. And you're going to earn 12 points.
They're going to earn Compound tokens on that. And they're going to auto-harvest those for us.
Okay.
So again, this is the beauty of a platform like Yearn or Harvest is that it does all this hard work for you. You could go and do this yourself, but you're going to be paying like more gas fees across the way. Like essentially, this takes my money, it takes your money, it takes other people's money, it batches it up, and then it goes and does its thing. That saves us money along the way, and obviously, as a result, increases our yield.
Oh, okay. So now you're going to allow them to stake it by pressing deposit and stake, right?
Exactly. So on this one, I'm going to get a little pop-up window here, which is going to ask me, as you can see, this is something that you've got to take into account. And that's why these layer 2 solutions are being brought into the equation. And it's something that you need to take into account when you're deploying your capital, how much gas you're going to have to pay along the way. Now, I've already used Harvest here before, so I'm not going to get all the confirmations here. But essentially what you do when you hit this button is you'd have to authorize Harvest to access my money, access my USDT. You'd then have to deposit the USDT itself. It would then have to convert it through into FUSDT, which is Harvest version of it, and then add that to their liquidity pool.
Okay, this sounds super complicated.
Well, it is complicated, and I mean, again, this is part of what Harvest does for you, is it does all that for you. I mean, essentially, you got to click more buttons and pay more gas.
Okay, so you've now staked your Harvest, and what happens next?
I've staked my USDT, and as you can see, my deposits completed here, and now I have to allow it to spend my FUSDC, which it's just converted through.
Winston, can you share your screen with us so we can see the approval process on MetaMask?
It should be showing it, but it's just popping up in another window for me. You'll be able to see it here. It's approving down the bottom. You probably don't want to see the gas fees I'm paying at the moment anyway. We're talking about sort of $20 to get in, $2 to confirm kind of thing.
And this is all going into the Ethereum network.
Exactly. And you got to obviously consider on this too, is that at this point in time, if we're talking about $1,000, you've spent a fair bit of money to get through this part of the process already, right? So that actually means that for you to get the yield, whatever that yield calculation is, you've got to account for that in your overall mass. And that means you might need to leave your money in for longer kind of thing to, just recover the cost of putting money in the first place.
So this show's cost you a lot of money already.
Yeah. Well, we're doing all right here, man. Unlike the other guys.
But you've now
trading shit coins and they've been doing quite well. So,
Now you've staked your $1,000. Now tell us what happens next.
So this is part of the beauty of this is that it's actually gone through. It's put the money into the system. And if you go through to the stake page here, we'll just find the right tab. Oops. Where are we? There we go.
You staked USDT and you're getting your return in USDT.
There you go. You can see that I've staked, just over a K. And I'm going to earn 8.5% on that. So this is just like the farm example that you showed before. Now it's just set and forget. We just leave the money in there.
And how do you get your money back?
You can just withdraw it. So as you can see here, you can unstake and claim. So whenever you decide that you don't want to be in this anymore, you can literally just hit that button and it'll pull it out. It'll pull out your initial capital along with the rewards that you've received as well.
Alrighty, Winston, tell us about other farming projects. This is one farming project, and I think you've given us a very good explanation on how to deposit money here and actually to earn interest, both in USDT and in farm tokens. What are the other DeFi projects that you're looking at?
In regards to yield farming?
Yeah.
There's a couple. So obviously, as I mentioned, I'm a big proponent at this point in time in stablecoin farming, yield farming. Like I said, much less risk, less reward, but much less risk. So there's a couple. BYBIT Finance is one which has recently come out, and this is like this is an even more dumbed down version of Harvest or Yearn. So essentially, same sort of thing. You just come along in here, go through the MetaMask process, choose what collateral you want to put in, and hit the button. Now, the beauty again of these is that they'll go through and they've got their own yield farming strategies in the background. So they'll earn yield on the yield that you put on the capital that you put in, so USDT, and you'll also earn their token. This token trades in the market already, and you can go out again and sell that for USDT.
Winston, have you ever heard of a project called Pickle?
I have, actually.
Amazing. I've got Jack from Pickle who's joined the show. Jack, welcome to our show. We're talking here about yield farming, and one of the highest profile or favorite yield farms that people have been talking about is Pickle. What is Pickle?
Hey, Ran. Hey, Winston. Can you guys hear me all right?
Yeah, we can hear you.
Gotcha,
all right. So Pickle Finance. Pickle is a few months old now, and it's very much in the same vein as YFI or Harvest. It's sort of a digital asset management. It's a yields farm, aggregator of sorts. It's kind of hard to put a finger on it. A lot of people call these like crypto hedge funds. And much like Yearn or like Harvest, it is a secure place where you can sort of set and forget. You can place your stables or you can place your Bitcoin. It's on the Ethereum network, just like most of these other ones are. And yeah, basically it seeks out it implements these strategies that seek out yield for your assets. And again, it sort of subsidizes the gas cost. One thing that really differentiates Pickle as compared to YFI is that we have an ongoing distribution of our governance token, the native governance token, which is Pickle. So we're always going to have that sort of, that extra bump on top of it. So basically, our strategies, and I see you looking right there at our staking page. So I guess, do you want me to just kind of talk you through the process of how to get into Pickle Finance?
Yeah, I think as a user, what's the proposition to the end user when the user stakes money with you and I think puts it into your jars? Right. What actually happens?
Okay, so the jars are basically, if you're familiar with Yearn's vault, that's very much the same thing as our jars. You acquire first the underlying asset, which we currently have 4 active jars. We have the SCRV, which is that is the token that you receive when you deposit liquidity into Curve's S pool. So once you acquire the underlying asset, you deposit it on Pickle Finance, and we sort of do, as Winston was just describing, the so-called hard work of farming and harvesting and then redeploying the profits as that underlying asset. So essentially what's happening kind of behind the scenes here is that you're depositing SCRV, which is a token that has value, right? We are in exchange giving you a token that sort of represents your share of that pool, right? So we call those tokens pickled tokens, PSCRV. That token there, it represents a certain share of the pool, right? So that SCRV now in the background is, we're running the strategy that is farming this asset that's being distributed by Curve. We're selling it, and then we're repurchasing that same underlying asset that you deposited in the first place. So you're holding on to this asset here, PSCRV. In the background, the Pickle protocol is creating more of it. So when it comes time for you to then, cash out, essentially, your share, your token now represents a higher number of that underlying asset that you deposited in the first place. And we have great, we have probably, I think right now, the best APY for your Bitcoin or for your stables right now. And if I'm wrong about that, maybe Winston can correct me, but I think we're running at 11 or 12% on BTC and then 30% APY plus for stables. So,
but when you say that people are earning this 30% or whatever it is, are they earning it? If I give you my Bitcoin, am I getting my return in pickles? Am I getting my return in Bitcoin? Where am I getting my return? Okay, so it's split. So let's start with just the jars, and then we'll go into kind of the farms, right? So the jar is that's just like Yearn or just like Harvest, right? So in that first layer, you're getting paid back in the same asset that you deposited in the beginning. You're just growing that asset over time, essentially, right? So it's a little bit, for me to say 30% APY is slightly misrepresenting, because that's actually split between 2 different sources, right? So you're on the jars page right now, correct? Yes, that's the jars page.
Okay, so that right there is just the strategy. That has nothing to do with the Pickle token, right? So you don't need to be the least bit bullish on the actual governance token Pickle or governance tokens in general to take advantage of these services of the profit generating strategies that we have here. So those jars, as I just kind of described, are going to pay you back in the asset that you deposit, right? So obviously or maybe not obviously, but the Uni farms right there, I believe they've just sort of stopped deposit. They've, that initial period of Uni distribution has ended. So we've kind of phased out those strategies and we've shifted to the stables, right? So, like the Ren BTC is another one, right? You deposit a BTC derivative, Ren BTC from Curve, and then we grow that over time at currently 3% APY, and that portion of your APY is getting paid back in the same asset that you deposited. Now there's a second layer. Okay, go ahead, Ren.
The question is, why wouldn't I just go to Curve and stake my tokens myself, or to Uniswap and stake the tokens myself? Why are you able to provide me with a better yield than I'd do if I went myself?
Right. So the short answer is, if it weren't for the second layer, which I'm going to tell you about, which is the Pickle distribution, really it's you can, as an end user, if you're comfortable doing all that, you don't have to use somebody like Pickle or somebody like Yearn. You can do all these strategies. As advanced as they get are all things that are accessible to a DeFi end user such as yourself or anybody else. The value prop of Pickle and other platforms like it, there's a few of them, right? So the simplicity is part of it, right? Like for me, the ability to just kind of deposit DAI here and just know that I don't have to constantly, worry about like, oh, how often am I harvesting this? How often am I redeploying my capital? Like, because you're trying to like offset the benefit of compounding, because we're constantly compounding your assets for you essentially with the loss of gas fees. So through constantly compounding your interest and by subsidizing the gas, that's one half of the value prop. Now, the other half of this, and the reason, quite frankly, the reason that I'm involved with this is that on top of that APY, on top of the jars themselves, you can take your deposit token, right, that you got when you deposited your initial asset into the Pickle protocol, and you can put that in one of our farms, right? And so the farms are the ways that we distribute Pickle, which are the governance tokens of the protocol, right? This is a second source of returns for you. This is not compounding. This sort of like over time, you'll accumulate these pickles, at which point you have the option to either sell them, hold them, or stake them. And that's kind of the next thing. Yeah, go ahead.
Let's slow down. If I look at these farms, there are three farms that I'm showing on the screen. One is a BTC CRV, one is a P3 CRV, and one is a PDAI.
Right.
What does that actually mean?
Okay. So I'm trying to think how to walk this through really simply, because you're right. Sometimes it's so easy to get down, you're so deep in this rabbit hole that you kind of forget where the average Bitcoin holder's, baseline of knowledge is. So let's just talk about one of them. That'll be an easier thing, right? Let's talk about the DAI, okay? So you have stablecoins. Let's say you want to hold on to your stablecoins, right? So you take your DAI and you're depositing that to us, and then that you're depositing it into the jar. The jar is simply just the strategy that leverages your DAI through the compound protocol, farms the native token there, and then redeploys it as DAI. Okay, so you deposit DAI in the jar, and we're going to give you a receipt token, which is called the PDAI, right? That's just the token that you get back when you deposit the DAI. So now you're a holder of this thing called PDAI. This PDAI is growing in value over time because we're holding your DAI and we're out there trying to find the best way to grow that capital, right? Which in this case here is through the compound protocol. If you then deposit that PDAI in this farm right here, which is, it's only going to cost you the gas fee. That's the process through which we distribute our governance token, which is Pickle. Okay. So I don't know if that helped describe that process.
Okay. So that works for me. Now, one thing that confuses me, and this goes out to you and to Winston, governance tokens. Why is there so much value placed on governance tokens? If I look at a YFI, for example, on Yuan Finance or YN Finance, there's a $600 or $700 million market cap on governance tokens. Are these governance tokens actually giving you a return? Are they giving you a dividend, a return? How do you make money off a governance token?
So I can speak for Pickle, which is actually, I'll speak more broadly for like the value proposition of governance tokens, right? So aside from sort of the voting rights and stuff like that, which you could argue have some sort of value to them, the original argument for these were that you could then vote in fees, right? It's essentially a stock, right? It's not very different than a stock in my mind anyways, in that you have voting rights. And then you also, if the protocol that you own a governance token of is profitable, you have the opportunity to share in the profits of that protocol. So in our case, you can stake our governance token, which is Pickle, and you share in a portion of the profits that are generated. So I don't know, Rand, if you want to pull up that Pickle Finance page again there, but if you go to the stake tab, you'll see what the current APY is, which I think is 50% or higher right now. So if you go to stake, 55%, 55.79%. So that's real. That's paid out in ETH, right? That's real profit. That's a percentage of the profit that's generated by the strategies that I described, by our jars, right? So it's currently 27.5% of the profit generated by the jars, and we distribute it to the token holders, the governance token holders. So they're sharing in the profit of the platform.
Okay, that makes a lot of sense. Jack, thanks for joining us. I'm going to bring Winston back onto the call, and I know that Winston wanted to talk to us today about SushiSwap. Jack, thanks very much for representing Pickle. You did a great job. We love the Pickle protocol. We think that it's amazing, and we keep staking money and trying to make money earning pickles.
Thanks a lot,
Jack.
Ryan.
Winston, welcome back.
Thanks, buddy.
Okay, Winston, let's talk about, you spoke to me earlier about SushiSwap. What exactly is SushiSwap?
So Sushi is a Uniswap clone, essentially. So it was a community-created version of Uniswap that essentially does the same thing. However, they call it what's called vampire liquidity in this space. And what it did was incentivize users, as we spoke before, with the Sushi token to move their liquidity from Uniswap to their own platform as a way of bootstrapping it.
So hold on, let me make sure that I understand this. So Uniswap spent days, weeks, months building an amazing piece of code, right?
Pretty much.
And then the SushiSwap guys said, okay, well, since it's open source, we're just going to copy and paste it, essentially.
Well, a little more complicated than that, but yeah, that's the essence of anything open source.
Okay, and then, just to be clear, what they said was, if you are willing to move your money out of Uniswap into SushiSwap, we will reward you with SushiSwap tokens.
Correct. Sushi tokens on the market.
And that's why they called it a vampire attack, because essentially what they did was they sucked all the liquidity out of Uniswap.
You got it.
And people like you and I moved our money and earned a whole lot of SushiSwap tokens, right?
There's no loyalty and liquidity in crypto.
Okay, so we have this protocol called SushiSwap. Tell me about how you use it and how you yield farm on it.
Well, it's the swapping part of it is pretty much exactly the same as Uniswap. They've got a list of tokens on there. You can go through, and wherever there's liquidity, you can swap tokens for. However, you pulled up the Uniswap page with their rewards before, which isn't actually active at this point in time. Sushi is. In fact, at the same time that Uniswap ended theirs, Sushi bumped theirs up. So they've actually taken like $1 billion in liquidity from Uniswap in the last week or so. So essentially, what you do here is, as you've got on the screen there, is that on the example that's highlighted there, if you deposit Sushi tokens and ETH into that liquidity pool, you'll earn Sushi tokens as a result.
Okay, but the problem that I have with Sushi tokens is that their token keeps going down in value. I mean, if I look at Sushi, let's call up a price chart of Sushi. Give me a second. I'm going to call it up onto our screen. Hold on a second. You may recognize this chart because I know that you've been quite active in the Sushi price chart. Okay, today Sushi is trading at $1.55. It's actually come up a lot today. But let's take a look at the Sushi chart over the last 90 days. It's not a pretty picture.
It's not at all, is it? But this is the issue when you start giving out your own token. We spoke about it before. What do? You ask, can you get USDT for it? Yes, you can, but you got to sell it, right? So for some people, as quick as they earn it, they sell it just as quickly. And that's what leads to charts like that. You can see that massive spike there was when Sushi first became a thing. Now, the trick with any of these is it's incentivizing the pool of the token itself. And what that means is that people, if they want to earn the token initially, have to go out and buy the token. That's what you see with that massive spike there. As they introduce other pools and you can earn Sushi tokens as a result, you no longer need to hold Sushi tokens for as long. You can sell them. And as a result, you see like a nice little mountain like that.
Okay, so let's go back to the staking of Sushi tokens. Tell me how, as a yield farmer, I can actually make money staking Sushi tokens or staking on the Sushi platform.
Well, yeah, again, it's exactly the same as Uniswap in the sense that you go through and you put liquidity into a pool. They've got different APYs, as you can see there, for each pool. So it's basically, you get a choice of assets. So you might either already have these assets, or you might want to do a safer asset. You can see that there's a USDT ETH one there. You add your liquidity in. It'll give you LP tokens again, which, as Jack mentioned, is a proportional representation of your percentage of that liquidity pool. And on this screen, you go through, you select it, you stake it. And as soon as you stake it, you start earning those Sushi tokens.
Winston, do you want to stake some tokens on Sushi to show us step by step how to make some money here?
Yeah, let me pull one up.
I love it. We're going to learn how to make money here. That's our job. Our job is to teach you guys how to make money, staking crypto, making yield on your assets. You know, one of the big criticisms for crypto in the past was that it was an asset that was dead and that you couldn't make yield on it. So you held this asset and you weren't making a return. But that's not the case anymore. I mean, if we look at today, there are many, many ways to make yield on your assets.
There is. And, you know, that's part of the fun of the game, I guess, is that, well, I mean, look at the choice here. You know, a lot of people will be just holding these assets, just waiting for the underlying asset to appreciate. This gives you a chance to sort of do something with it in the meantime. And if you look at some of these figures here, like there's quite significant incentive with some of these to earn. So again, I'm a relatively risk adverse yield farmer, so I'm going to stake some USDT here. Again, with any of these sort of interactions, you'll need to go through an approval process. So you need to let the platform have permission to do anything with your assets. That comes down to that custodial component I was talking about before, the difference between centralized exchanges and decentralized ones. You have full control over the assets at all point in time. So we're just going to let this one approve. Again, we're paying gas at this point in time. So this is all a consideration that you need to make as you do this. And we're just going to wait for this one to confirm. All right, so we're cool here. Now, the thing is that we need to pop some assets into the liquidity pool before we get these LP tokens. They're called SLP tokens on this Sushi LP tokens. So I'm just going to do that. I will.
Okay, just explain that to us again. Explain what that means.
Which part of it? Sorry.
The part that you have to get SLP tokens.
So again, that's depositing money into their liquidity pools.
So you're not depositing money, or what are you doing?
Yeah, I'm just going to pull that up for you in a sec. I just have to hide some of the screen here.
You don't want to show us how much money you've got, huh?
Well, I had a wallet prepared for this actually, but it won't share the screen on my Firefox, so we just have to roll with it for now.
All right, we're waiting here anxiously, learning how to make money, how to give our money to Sushi, provide liquidity, and make some kind of yield back in return. I'm just taking a look at my screen here. It looks like the US markets are pretty flat, down. Gold is down today to 1857. Bitcoin doesn't give a damn, still at 18,000.
All right, I've got this here, so we're just going to pull it up. So as you can see here, this is very similar to that Uniswap interface that you showed before. And
let me just show you.
Yep. Essentially, what we're going to do here is we're going to add into the USDT and ETH pool. Once we add this in, this is going to give us a proportional representation of the pool. As you can see, this is a massive pool. So I'm going to be like a tiny percentage of it with kind of the assets that I've got here. Again, we need to go through an approval process to let the platform spend our assets or access our assets.
Winston, you're staking 12.8 ETH. And
yes.
$6,100. Does that mean that you're only providing liquidity for one pair, which is the ETH USD pair?
Well, I'm providing it for that liquidity pool. Anything that happens on Uniswap or SushiSwap or these sorts of platforms, you're putting it 50-50 essentially. So you're taking both sides of the book in that regard.
Okay, now this is the great time to talk about. This is a great time to talk about the impermanent loss. Tell me what happens when one of the assets that you stake goes down. So let's say that I stake 100 ETH and $100, and ETH goes to $2. What happens?
Well, you're quite wrecked at that point in time. But essentially, like, you'll end up with more of the other one kind of thing. So this is why stablecoins make it a little more safer. Is that you know, like I'll end up in that scenario. If ETH is getting sold off, I'll end up with a lot more ETH and a lot less USDT.
Okay, hold on.
The theory is you should have an equivalent dollar value. Doesn't necessarily work out that way.
All right, hold on 1 second. Let's go 1 second. If I stake 50 ETH and 50 USD, so let's go back a stick. 100 ETH and 100 USD. And so now I have $200 on the platform. If ETH goes down to 50 instead of 100, what happens to my US dollars?
Well, you end up having less of them. You have more ETH.
More ETH, less US dollars. Is the value of my portfolio then 150?
That's a good question. I can't do the math offhand, but it's less. So you like impermanent loss, you know, like as the name suggests, like you lose some money when assets fluctuate, because like it's like having an asset that you're holding that you can't sell as it's going down.
Okay.
All right.
Winston,
so
we've got 5 minutes. Show us how to make money on SushiSwap.
Well, as you can see here, now we've got some money in the pool here, and we're going to go through. As a result, I've got some LP tokens, and we're gonna stake these LP tokens on that other screen. Just give me a second. I'll flip to that.
Is there a risk that your money will be stolen out of SushiSwap here?
There's a risk with any of these platforms, to be honest. Whoops. So that's really the name of the game, is managing risk. It's like any LP tokens on that other screen. Just give me a second. I'll flip to that.
Is there a risk that your money will be stolen? I'm getting an echo.
There's a risk with any of these platforms, to be honest. So with the game is managing risk. It's like any LP tokens on that other screen. Just give me a second. I'll flip to that. Is there a risk that your money will be stolen? I'm getting an echo. There's a risk with any of these platforms, to be honest. Is that at your end, buddy?
I don't know.
I don't think it's at mine. Anyways, we've got the tokens here. Now I have the ability to add them in here. So essentially, you'll be able to add these in. you got to hit the max button. They'll show up here. One just hasn't confirmed yet. Hit the confirm button. And once that's done, you'll start earning Sushi. It'll be just like you saw with the farm tokens before, where once this is active, the number will start going up. And if you want to take them out of the platform and sell them, you can hit this harvest button. Or at any point in time, you can unstake the tokens. When you unstake the tokens, it'll also harvest them for you on the way out. Going up. And if you want to take them out of the platform and sell them, you can hit this harvest button. Or at any point in time, you can unstake the tokens. When you unstake the tokens, it'll also harvest them for you on the way out.
Okay, got it. So you're staking, you're giving USD ETH to SushiSwap. You can withdraw it at any time, and you're earning your yield in Sushi tokens.
Correct. Keeping in mind too that you're also going to earn a percentage of that trade fee with each trade that happens as part of the pool that you've supplied liquidity to.
Now, Winston, I know there was a big rush for yield farming in the beginning. Is it still as popular?
It's definitely not as popular. I mean, it's not in the like retarded stage that we were at, where we were looking at new platforms were popping up and you were getting like 1,000,000% APY in the initial stages. And as I've been mentioning throughout this, a lot of it's migrating through to stablecoin yield farming now, which is just much safer.
Winston, we are running out of time. It's been amazing having you on our show again. We look forward to having you again. Where can people follow you if they do want to follow you and they do want to learn more on yield farming? Where can they get hold of Winston the Wolf?
They can jump on Telegram and they can search out Wolf Crypto.
Guys, it's been a great pleasure hosting the first show of Crypto Banter. We have run out of time. I look forward to seeing you again tomorrow, same time, same place at cryptobanter.com.
Peace.
Crypto Banter